Do you know what are the different account policies in KYC for professional intermediaries and fiduciary accounts? Please subscribe to our channel and hit the bell icon to be the first one to receive the notification of our latest videos. Hello and welcome to Bank Read, where millions of people around the world can learn and be aware of banking and finance. So let's get started. KYC. Across the planet, banks became a serious target of cash lavation operations and money crimes. As a result of banks give a spread of services and instruments which will be accustomed conceal the supply of cash. Two cardinal rules that are to be invariably ascertained by banks for steering beyond the cash lavation traps are: 1. Know your customer, KYC, and 2. Know your employee. Commercial banks in the Asian nations needed to stick to anti-money lavation tips based mostly upon Know Your Customer norms issued by the Banking Concern of India in August 2002. Banks are suggested to follow client identification procedure for a gap of accounts and observation transactions of suspicious nature for the aim of news it to the accepted authority. These Know Your Customer tips are revisited within the context of the recommendations created by the Money Action Task Force (FATF) on anti-concealing (AML) standards and on combating funding of coercion (CFT). Let's see the accounts opened in several segments. Client accounts opened by professional intermediaries. When the bank has data or reason to believe that the shopper account opened by an expert mediator is on behalf of one shopper, that shopper should be known. Banks might hold pooled accounts managed by skilled intermediaries on behalf of entities like mutual funds, pension funds, or different forms of funds. Banks conjointly maintain pooled accounts managed by lawyers/chartered accountants or stockbrokers for funds control on deposit or in escrow for a spread of shoppers. Wherever funds controlled by the intermediaries aren't commingled at the bank and there are sub-accounts, every one of them owing to a helpful owner, all the helpful homeowners should be known. Wherever such funds are commingled at the bank ought to still peruse to the helpful homeowners. Wherever the banks trust the customer due diligence (CDD) done by associate in a nursing mediator, they ought to satisfy themselves that the mediator is regulated and supervised and has adequate systems in situ to suit the KYC necessities. It ought to be understood that the last word responsibility for knowing the client lies with the bank. Accounts of trusts and foundations need to verify the names of trustees, settlers, beneficiaries, and signatories, name and addresses of the founder, the managers/administrators, and also the beneficiaries' fictiones, telephone/fax numbers. 1. Certificate of registration, if registered. 2. Power of lawyer granted to interact business on its behalf. 3. Any formally valid document to spot the trustees, senders, beneficiaries and people holding power of lawyer, founders/managers/ and their addresses. 4. Resolution of the managing body of the foundation association. 5. Telephone bill. PEPs. Accounts of politically exposed persons, PEPs. Resident outside Bharat. Politically exposed persons are people World Health Organization are entrusted with outstanding public functions in an exceedingly foreign country. For example, heads of states or of governments, senior politicians, senior government/judicial/military officers, senior executives of state-owned firms, necessary organization officers, etc. Banks ought to gather ample info on any person/customer of this class aiming to establish a relationship and check all the data out there on the person within the property right. Banks ought to verify the identity of the person and get info concerning the sources of funds before accepting life as a client. The choice to open an associate in nursing account for life ought to be taken at a senior level that ought to be clearly spelled under the client acceptance policy. Banks ought to conjointly subject such accounts to increased observation on an associate in nursing in progress basis. The on top of norms may be applied to the accounts of the members of the family or shut relatives of PEPs. Fiduciary account. According to the FDIC, fiduciary accounts are treated as regular accounts you would possibly have as long as they're in hand by you. The account records justify that it's a fiduciary account, and each you and your fiduciary are known. In simple, if you entrust funds or different assets with a fiduciary agent, they are going to place that money into a fiduciary account. Fiduciary accounts are bank accounts that are in hand by you, however managed by your agent. Few samples of fiduciary accounts embody trusts, estate accounts, written agreement accounts, and accounts with the influence of lawyers. Fiduciary responsibility is that the fiduciary agent's duty to act de jure and ethically, whereas managing their client's assets. Money fiduciary is needed to disclose elaborate records once they advise you on one thing. This may assist you to visualize however the choice would profit your company. Fiduciaries should update their accounting records by recording gains and losses of business capital. And the fiduciary has to give supporting documents, therefore your accounting records are clear and correct. 1. The fiduciary should be eligible for membership. 2. Legal documentation should be provided before the account may be opened. 3. A fiduciary account is opened. Victimization. The social insurance range of the individual. World Health Organization owns the funds or the tax ID for. A check card or ATM card may be issued within the fiduciary's name solely. Thanks for watching. We hope you learned something valuable today. Don't forget to like, share, and subscribe. Also, hit the bell icon to be the first one to get the notification of all the upcoming videos.